Good to see you, Ryan.
Good to see you.
How are you?
Good life, man. You have the background that I think every other speaker will envy. The only one that I think had a similar quality background was Taj from MIT. Awesome. He had basically like a big wood pile. I think he was like outside a barn or something. Yesterday. But good to see you, man. How you holding up?
Good to see you. Holding up great. Thank you for putting on this conference. I've been watching and lurking for the last day, I guess, and this is going great. So bringing everybody together when we are not otherwise together, and while otherwise we're watching some form of global chaos, which don't mean to take lightheartedly, but thank you for putting this together.
Yeah, of course. It's interesting you bring that up. I mean, for our team, so much of the planning going into this and the actual kind of game day execution has been maybe a welcome distraction in some parts, but we obviously have tried to keep it top of mind. The way that I can compartmentalize is, really thinking that for the past 7 years, maybe you feel this as well. I kind of feel like I've been voting with my feet and voting with my day-to-day work in helping to build out Bitcoin and the crypto ecosystem, because it is an alternative. It is a defensive technology. And in some cases, it can be a subversive defensive technology, which we try to gloss over so that we don't lose the battle before we've even made some inroads. But maybe that's a good jumping off point, because let's start meta and then we can talk about the tactical. During the Bitcoin presentations yesterday, Neha Narula and Elizabeth Stark talked about, if Goldman Sachs embraces Bitcoin, then maybe we've done something wrong. The other extreme is, without large, deep-pocketed investors, it's tough to build a monetary base, which in turn makes it difficult to attract a large enough audience. It makes it difficult to actually build applications that are going to be useful. But there's a lot of kind of gray area nuance in between. How do you think at a kind of visionary level about Bitcoin's role in society right now, what it could be, and then how institutions play into that? Are we selling out to embrace the Goldmans of the world and the investment banks? I think it's a question that is worthwhile, and maybe in this environment, it's top of people's minds. How do you think about the big vision versus the day-to-day?
It is a great question. Most folks in this space are excited about the unique properties that you get with something like Bitcoin: decentralization, transparency, right? So when you start to think about these large players, you're like, well, wait, isn't this antithetical to the decentralization concept? I think everyone needs to be included. We need to have products and services. Some people are going to want to have direct access. Some people are going to have a bank that takes care of it. Securing assets, if it's really your life's your life savings, do you want to be solely accountable for that, or do you want to be able to leverage somebody else? But the great thing about the technology is that it's completely inclusive. Everybody can participate at the same level, same footing. Nobody's got an advantage. Bitcoin knows nobody as a preferred investor, so to speak. And we need to bring institutions in. That's how we're going to bring in. Some people are going to want to access via funds rather than have direct access in the short term. Some people are going to want to have large portions of it, maybe managed by somebody else, while they'll still want to have some amount of cash that they manage on their own. So just like with all things money, you really need a lot of choice and options in terms of how you can store it and save it and think about it and all that. So I think there's no doubt that if we want to take this to the next level, of course we want it to be inclusive of everyone. And that means all retail, that means all institutional, and providing lots of bridges, lots of connectivity, and that's going to bring better markets.
Institutions are probably the most risk-averse investors out there, and nothing feels safe right now. So when you talk about institutional investors, there's multiple categories. What are your target customers saying these days? How are they thinking about COVID and now this unrest in the U.S. and the hyper volatility in the underlying markets, the unprecedented fiscal action? I mean, it is chaos across the board. Even though Bitcoin remains volatile, does the surrounding volatility and chaos of everything else going on make it a little bit easier for these institutions to enter, or are they just in crisis mode where they're taking more of a defensive posture? What's changed this year, if anything?
Well, we've certainly seen some of each. So, when the markets tanked in March, we saw a lot of flight to conservative investments. Suddenly, people had a need for cash. We saw markets tank. We saw Bitcoin tank. It all kind of drops together, and that's kind of this fear and flight to safety and fulfill obligations. But in the time since then, as people have started to think about, wait, what does this mean? As governments have reacted in terms of using kind of their one primary lever, which is printing more cash, people are starting to think, wait a minute, maybe things are accelerating, and the properties which digital assets and Bitcoin bring to the table may be valuable to all of these guys sooner. And so I think we've definitely seen that over the last month and a half now. So of course, Paul Tudor Jones is famously in. We're all very excited about that. I mean, he is like senior statesman kind of in that arena, right? You think that other fund managers aren't also thinking about that? Of course they are. Now, traditionally, in the digital asset space, we haven't yet seen kind of the crossovers come in. And this is a problem for getting mainstream adoption here. What we've seen is a partitioning. We've got all of your traditional assets, whether that's precious metals or structured products or equities or whatever it is. And then you've got your digital stuff, and you keep them separate, and never the two shall meet. And there's been very little crossover. When we start to see crossover where major funds are starting to say, hey, we're going to allocate a percentage of our portfolio towards this new asset class, that's when we're going to start to see like the true institutional pickup. Until then, institutions at the Bitcoin and digital asset level, it's not quite the same institution, like if you were talking to Morgan Stanley, Goldman Sachs, JP Morgan today. But that's all because this is an emerging market, and this is pretty normal. So overall, it's very fortunate for our industry, and it's unfortunate that it comes on the backdrop of kind of one global crisis setting up a tinderbox, and now kind of the social unrest behind it. But it is raising the question of what is sound money, what is safe from what our governments may do or may not do in the near term, and that's bringing a lot of new interest in. The fact that JP or Goldman or others are talking about it a little bit more right now is absolutely reflective of the fact that their clients are also asking them about it.
You guys have said that you're first to market with the prime brokerage service, and obviously just had the big announcement last week. Whether you're first or second or somewhere in the top few by a few weeks, I think it doesn't really matter. But what I think the bigger question is let's talk a little bit about the different approaches, and this is in part a minor recap of last night's session for maybe those in Europe that weren't able to catch the session with Mike and Pete from your team and Michael from Fireblocks. How will that market be won, and how many players do you anticipate being integral there? And maybe that can kind of segue into the natural next question, which is why did you take this approach from starting first with tech and multi-sig custody at the kind of foundational elements of the company?
Right. Well, first off, we want to see a lot of diversity here in terms of options. It doesn't matter whether you're talking Bitcoin or any other financial asset. You want the ability to diversify how you store it. Hedge funds are using more custodians to store their assets than they used to, in part, in 2008, told them that, hey, if you store it all at Lehman Brothers, that may not be the best idea. And those funds, of course, aren't around anymore. So we want to build up a very healthy ecosystem. Once we get there, the innovation in this particular asset class gets to accelerate like none other before it. And that's because it's software, all the way back to Mark Andreessen's idea that software eats the world. It absolutely is going to happen here as well. Now with money, it's a little bit different, right? We've got to be very safe and very careful with how we treat this stuff. We've got to have an absolutely rock solid foundation of security and safety. That needs to be complemented with a very mature and well-integrated compliance and regulatory solution so that it can work for kind of everybody in their various jurisdictions and locales. But then once you've got those things and we get this going, we can start to innovate. In the meantime, with prime brokerage, to answer your real question right now, it's fantastic. There's actually at least 3 different models of prime brokerages coming to market right now. Now, which ones are gonna survive and which ones aren't? We'll see. All of us are building an ecosystem where we're trying to put market structure in where we haven't had it before. And anybody that comes from the decentralized world is like, well, wait, do we want that old market structure that we have with the equities markets or with the derivatives markets? Maybe not. But there's elements of it that we still can learn from, of course, in terms of robust markets, fault-tolerant markets, markets that prevent front running, and make sure that you get the best execution prices and things like this. So we need this in order to have good markets. And in particular, institutions need this because they're moving large amounts of money on behalf of their clients where they act as a fiduciary. And if they don't provide it, their clients are going to come screaming if anything goes wrong. So you've got some that are building prime brokerage onto the side of an exchange. Totally understand why they're doing that, right? They started with an exchange and it's a vertically integrated full exchange. They are acting as the broker to the buyer, the broker to the seller. They're acting as the clearinghouse. They're acting as the custodian. They're acting as the exchange. Ultimately, I think that model does have to tease apart, but it's going to be difficult to convince other traders to participate with your prime brokerage if it's bolted onto an exchange. There's a natural competitive element there, and it's also going to be difficult to attract clients into that system because, again, it's like, wait, I need a broker that's independent from the exchange. And if I make a deposit of $50 million, it's important that the exchange not know that and front run me. Another model you might see folks that have been in the prop trading business trying to build prime brokerage. And this doesn't quite work for the same reason, right? Like, how do you know that they're not trading kind of against you if they participate in trading as well? So at BitGo, we've built everything from the custodian security first. That's security has to be rock solid. Compliance regulation, okay, that's there. Now we can start to interface with others. We're never going to be a trader directly ourselves. We help our clients have access to liquidity across multiple venues, and we do that on a fully non-disclosed basis. So this gives you protection from the front running elements I just discussed. Finally, you get to keep your capital in custody, in the bank, safely. You don't have to pre-fund, 3 or 4 different exchanges, which allows you to get way better capital efficiency because now you can have, $50 million with us and you can trade it across all of the venues rather than having to go say, okay, I'm going to put a little bit over here and a little bit over here, a little over here. So the exciting news is that, with prime brokerage coming out and having multiple vendors all pushing on market structure, we're going to get some good innovation here. And it's not to say that BitGo's approach is always perfect. I think others are going to also add additional value to this. But it's an exciting time to finally see this coming together. And this will enable the large funds to actually have a place where they can participate.
For BitGo, how in general, how do you actually draw the lines? Because it seems like there's a lot of gray area in between potentially trading against your customers, but also, offering the convenience and reliability of having everything in one place. So these two things are at odds. I think institutional investors tend to have an expectation that some of these services are fragmented, but crypto is different for a host of reasons. Who do you see as the ultimate winners here, or maybe said another way, what are some of the constraints that the winners in prime brokerage will be willing to accept in terms of business they're going to forego because they find that it's too much of a conflict and could potentially be bringing into competition customers or necessary partners?
Well, I think once we have the market structure established, actually the clients are going to help drive us to the right place. Now, I think we also do need to keep in mind the ethos of what got us here: decentralization and transparency, right? So it's very easy to quickly say, look, I'm going to take it all off chain, right? Which we actually see almost exclusively at the trading level today. Or you might see a large amount of asset, coalescing at a single custodian. So in the background here, we have to figure out how to pull these forward, which means we do have to figure out how to make as much transparency around what we trade possible. And I do believe clients will pay for that once it's done because it removes risk for them. At the end of the day, when you get into the markets, you've got pricing, which comes into like, what's my cost to execute this business? How much profit am I trying to take? And what's the risk that I need to fund? Our early stage market isn't necessarily pricing in risk quite appropriately. I think there's a lot of small companies vying for market share where they may be paying for risk or taking risks that they haven't fully really saved for. So as we build out this market structure, we're going to have to make sure that that actually is accounted for. And the large businesses are going to ensure that we do that, and they're going to gravitate that way. In terms of separation of duties across, custodianship or trading or prime brokerage services, typically the way we do that is through, subsidiaries, affiliated companies, which has some amount of like, is that really, a full firewall between them? And this is a challenge that the industry has faced for decades, not new to crypto per se. We announced that Nick Carmi is heading up our prime brokerage service. So there's actually a separate management team that runs BitGo Prime, which is where the trading comes through. And then there's a separate management team that runs, BitGo Trust Company, which is where we do custody. One thing that people don't actually realize when BitGo does custody, and I think we're the only player in the entire space that does this, we're actually separating your keys across two entirely different run companies. Now, you could pick that apart and you can say, look, these are reporting up to the same, BitGo Holdings company, which is run. I'm the CEO of that company, but it does have two completely separate operational teams, management teams, et cetera. And part of the challenge of growing all the market structure and all the things that we're doing is getting these as separate as possible. So the challenge to BitGo and to the industry is to figure out how do we do a better job of separating affiliated companies than what's happened in other types of markets. I think we can do it. In part, it's about growing to levels in size where there's enough revenue coming in that you can fully separate and firewall off these different organizations. That's coming, and BitGo's absolutely dedicated to it. I want to see a world where we can have different parts of the company federated across completely different subsidiaries or affiliate partners. But they operate in different jurisdictions. They have different management teams, and there's no way for anyone to come in and compromise the whole. Because at the end of the day, back to our security roots, it's about eliminating all single points of failure, and that applies to our markets just like it does to preventing theft.
We'll end with a quick one. So what's next for BitGo? Is there a period where you're kind of in digest mode? Or are there other kind of complementary pieces without, giving away the roadmap that need to be built in here for you to feel like this is a complete service?
Well, there's a ton to do with just continued iteration. Nothing is fully formed and done out of the box. You're constantly moving up, and in particular with security, you're never done. It's not a destination that you finish. You just keep raising the bar. So we're doing that at the security level. We're doing that at the regulatory level, constantly moving that up with regulatory presence in new jurisdictions around the globe. And then, of course, we have to do that at the trading prime brokerage services level, where we're bringing on new assets, we're bringing on new trading counterparties, and then we have to add other products and derivatives and things like that. So there is a never-ending set of work to be done here. What I'm most excited about, though, and I think is going to start happening in 2020, seeing some incumbents come into the space. These are from the traditional asset classes. That's going to help us move this up to another level. So lots to come.
Mike, enjoy the beautiful day. We should all be watching this virtual conference outside. I got to get on your level, man. The only issue is out of my back patio, there's first of all, I think similar birds chirping, but more importantly, I'm not getting good Wi-Fi out there, so I'm stuck in this room with the beach photo in the background, but not much else.
Wi-Fi's extenders are easy.
Yeah, well, you know what? This is a temporary place for us, so we'll be into a new citadel in a couple of weeks. Chaos, theme of the day, theme of the conference.
Thank you, Ryan.
Always a pleasure. Thank you for the time today, and thank you for your support for Mainnet, where we've now raised over $75,000 for COVID relief and counting. So thank you all.